everyone, and thanks for tuning into this roundtable discussion, which is going to be co-hosted by GTR and Crédit Agricole. My name is Shannon Manders, and I'm GTR's editorial director. We are joined by a fantastic lineup of speakers today, including global and regional heads of trade at some of Europe's and the world's top trade finance institutions. So I'd like to start by asking them each to briefly introduce themselves. Andrew.
Hi, I'm HSBC's regional head of trade for Europe, and I'm the global head of commodities.
Daniel Schmand, I'm working for Deutsche and heading trade finance and lending globally.
My name is Enno. I'm heading the trade finance and supply chain finance business at Commerzbank on a global level.
James.
Hello, everybody. My name is James Binns. I'm the global head of trade and working capital at Barclays.
Hello, everybody. My name is Martina Zimmerl. I'm heading trade finance in RBI Vienna, being in charge end-to-end for operations, product management, sales, and all the IT agenda.
Hello, everyone. Mencía Bobo, global head of trade and working capital for Banco Santander for the corporate investment banking.
Michael.
Hi, good morning, everybody. My name is Michael Hogan. I run the transaction banking and trade business for MUFG, based in London.
Hi, everybody. Naeem Khan. I am in charge globally for the trade finance business at CIB, based in Paris.
And Peadar.
Good morning, everyone. Peadar Mac Canna. I look after Citi's trade business across Emea.
Excellent. Thank you all very much for taking the time to engage with us in this roundtable discussion. I'd like to hand over to Naeem Khan, who's going to be our chairperson for today's debate. Over to you, Naeem.
Thank you, Shannon. Thanks again for joining this roundtable. Today. As Shannon already briefed at the certain topics which are critical importance in today's environment, we would like to have a most interactive discussions all together to see where exactly we are moving, how we see the upcoming challenges faced to the trade industry. So the first, I think the first topic which I would like to place with all you guys, clearly the impact of COVID-19 and how at the macroeconomic level the impact on the trade business in Europe particularly, and also to see and to explore the trade tensions we have seen in the last couple of years, and now moving to a different scenario. As we all know that the European trade is heavily dependent on the traditional manufacturing sectors like aerospace, automotive, engineering, and others. How this sector development would sustain in the current environment. Maybe I will invite Daniel to make his first remarks on that, and then we will take it forward.
Yeah, sure. No problem. So from a COVID-19 perspective, I think it's very dependent which country you're sitting. What the government measures have been, because we are literally at the tail end of then supporting companies and trade flows. From my perspective, sitting or being domiciled in Germany, we have not seen any slowdown, neither on the lending nor on the trade finance side. How have we reacted to the COVID pandemic, and how have we reacted to the client segments? We have literally widened our credit appetite at around 10 billion to be able to be very fast in supporting our client base. And that is literally working hand in glove with the government, not only in Germany, that is actually true across the globe. So we are seeing more and more government supported programs, and we feel very well embedded into that one. I'll think on the trade tension or the geopolitical uncertainty that will remain, that will further pick up, and we will see a higher level of uncertainty, tensions going into 21. So you need to be very specific with your risk appetite, both on sectors as well as on countries. Overall, that's the beauty of trade finance. The more challenges you see, the more trade finance instruments are being needed to support the real economy.
Yes, thanks, Daniel. It is a question: where are you sitting today, and how the governments are supporting those initiatives. Maybe I will invite Andrew to share his views on that. Based in the UK, and how you see these challenging times and development of trade industry.
Yeah, definitely. So we clearly see, global exports down, similar in Europe, down circa 10%. Same on the import side. So volumes and volumes have adjusted, no doubt about that. We, like other banks, have been very quick to support through, different forms of trade finance, but also participation in government schemes, country by country, around the world. But what we notice differently is this sort of working together, right? So we see, the future of trade more around platforms converging, around financing, inventory, payments, logistics partners, and so on, and the ability to work together on a digital scale. And that has definitely accelerated over the course of this year. We see that in certain markets being really strong, so 90% plus digital trade in some countries, others clearly in a catch-up mode. But what we see is this driver to work together and to sort of break new ground. So we see that coming through. I mean, on the risk agenda, clearly the same story, right? So really clear about different sectors, monitoring exposures, supporting where we can, looking for some more security, perhaps over and above clean lending. So an ability to support and help, be more digital, and support clients coming through the transition.
Thank you. Maybe I will request Peadar from Citi. When we say that, today maybe the trade flows are going down and in certain sectors, how you see from Citibank perspective, your clients, particularly in Europe, remodeling their business?
Yeah, I think there's a wide dispersion of scenarios, really, when you look across the country, the sectors, the various different companies. And many of these, our clients were already on a journey in terms of business transformation to new business models and digitizing. And the one thing the pandemic has certainly done is given that a boost, a massive acceleration towards that. So the initial disruption that was there in terms of all these industrial manufacturing models where everyone is working on just-in-time delivery, that disruption leads to a flux and volatility in their prediction and their forecasting models. So a huge amount of disruption from that perspective. But once people got over that and continue to work with it, we see a real sort of focus since Q3 for people to re-engage on their new business models. Some of those have been accelerated, like the digitization and online distribution and B2C models. And that requires investment, which is difficult in the current environment because clearly earnings are destroyed in many industries. So I think, again, looking at those different industries, I say those that have difficulties in terms of cash flow, those that have higher volumes or demand higher volumes, those that have higher embedded fixed costs, still being challenged, but really being forced to change those models as soon as possible. I think the shape of the recovery is clearly unknown. Obviously, some good news in the last couple of weeks, but that helps in terms of stability, in terms of making maybe future capex decisions.
RBI is covering quite a diverse set of countries, and if we speak about Austria or the Czech Republic, it's more true what Daniel said. Actually, we had a very, very strong third quarter that partially offset the decline in exports that we have seen in the second quarter. In what we see from our clients is that definitely the topic of nearshoring has become very important to them. They've seen the vulnerability of the supply chain, and what we see is that they are trying to find alternative solutions, alternative suppliers in order to secure the supply chain. We see that inventories have increased both because of weakened demand in certain industries, but also because the need of our clients to look for security is higher. So we have seen an increased request for inventory financing on our side, and what we also see is that cash facilities are just being drawn without actually any usage yet for investments. Yeah, but our clients try to sit on higher cash piles than before, just in order to address this need of security. And if we look at Eastern Europe, then definitely, in addition to COVID, there have been other effects as well. If you look at Russia, for instance, this large drop in oil prices is actually, as our clients and also colleagues are telling us, affecting the country more than COVID itself. Yeah. If you look at Ukraine, we have seen a very dry season in Ukraine this year. So also here, the exports, and Ukraine is an agricultural country, are suffering more from that end than from COVID.
Yeah,
but it needs to be seen how the lockdown develops, the second lockdown wave develops. Yeah.
Yeah. No, it's true that I think we're all in the situation where we have traveled a long way, from the phase 1 of a pandemic and now sort of a phase 2 of a pandemic. From Commerzbank, I would like to have your views on how the German clients addressing these challenges, particularly given the automobile industry and other industry where Germany is in the lead globally.
Yeah, thanks. Well, I think first of all, Germany is, given its say interwovenness in the global economy, is just a mirror of the global economy. When it went down in the Q1 dramatically, we were seeing drops of 30 in particular industries, 40% of the trade flows, and clearly the automobile industry was hit hard, very hard, where we have seen these videos that were all too present, where Chinese car sellers were trying to sell cars where no one was allowed to go to the car shop. So the automobile industry was truly hit hard, but yet again had a fantastic Q3, where some of the producers were even able to outpace the expectations of the adjusted Q3 sales. So some of them did really well. And why was it? Because they were very fast in pushing and making clear that they are addressing the future of automobile industry, with just Volkswagen as one example, now pushing some 17 billion euro investments in the electronic car segment, so to face the challenge of Tesla. And that proves the innovative capability of the German automotive industry. But then I think on our side of banks, what are the discussions that we are seeing with our clients? And this, I think, is not specific to Germany. Yes, they're requesting new digital ways to interact and to enable the same level of securitization of the international trade flows, because this crisis is just a crisis, and in every crisis, the level of trust is going down. And eventually, trade finance was built to bridge the trust gap between the exporter and the importer. So I think we all in trade, we are in the middle of the solution space now. And when it comes to the digital solutions, we can make sure that, or we can show basically that we have real solutions to show. And a digital support of a trade finance transaction eliminates the need of physical paper. And in times of lockdown, when, for example, certain regions where DHL was just not shipping any parcel, you couldn't rely on physical papers. But then again, if there's one platform, and various colleagues already mentioned the importance of digital platforms, if it's all around the trust, right, it still needs a strong partner of such platform to provide a similar level of trust than the SWIFT platform actually does, because in the end, the corporates always choose what is the platform that is crisis proven. And I think this is yet to come.
Yeah, clearly. But it's true that, there are certain industries or sectors which are sort of passing through this phase. James from Barclays, do you also share this view from the UK manufacturing sector perspective?
I think manufacturing obviously encompasses many different sectors. So it depends which sectors they're manufacturing for. And clearly there is a different story across those different sectors. I mean, in the UK, the government has been, I think, fairly comprehensive in its packages in terms of the SIBLs and syllables, the loan facilities that should have been out there. So one of the things we've seen is actually our funded trade and working capital exposure go down as companies switch to those government-supported term loans. But what we have seen is our unfunded, more risk mitigant solutions continue to maintain volumes and even increase. So if you look at the volumes of bank guarantees and indemnities, for example, they are pretty consistent with pre-COVID levels. And we're actually seeing an increase in those in fourth quarter. I think the value of LCs outstanding and confirmations in particular has slightly increased as well. But it's interesting. We also have quite a big invoice discounting business in the UK. And at the height of the crisis, the value of invoices presented by our clients dropped by about 30% from then pre-COVID levels. But the value of borrowing against those dropped by up to 60%. And you could see how there was that switch from trade and working capital solutions more to government loan-backed solutions, in addition to some of the other support programs like furlough, VAT holidays, and so on, which obviously impacted corporate balance sheets and cash flow statements.
Yeah, thanks. I think we all share the view that there is obviously every country in Europe, particularly, are facing a bit of a challenge on that, and maybe readdressing the markets also. Which are the markets globally would be available for the European clients there? And if you see from French perspective, there are various layers of support coming from the financial institution side, as well as from the governments and the EU side, because there are various stimulus packages to support the large corporates as well as on the SME side. But would it be enough? Anybody's guess. I believe that the governments and the host governments are putting a lot of resources, pushing the economic activity, but how long it will sustain, that is at least a question for me. I mean, anybody can take that view and comment if you like.
So from my perspective, I think governments have done a pretty good job generally sustaining economies, particularly across Europe. The question is how long they can continue to do that, and obviously how long we're just postponing underlying problems. And I think the answer to that will lie in how quickly and how successfully a vaccine can be rolled out, and how the world can adapt to a new normal, given everything that's happened. And obviously, the quicker we can do that, the less impactful the ultimate fallout will be from that. I'm quietly optimistic, especially given recent weeks. But obviously, we'll wait and see. But that level of government support is going to remain particularly important. And it's interesting also to see some of that support evolve in terms of increased ECA activity and some of the other more trade-related and trade-specific elements of government support packages.
Yeah, absolutely. Maybe we can move to the second topic, which is the shifting of a supply chain, both from location side as well as from the risk perspective. Andrew, what is your take on that? Do you see that it's moving? It's moving. The different supply chains are moving across the globe, across the borders, or do you see that it is more coming towards centralizing in Europe?
Yeah, I think it clearly depends on the industry, but overall, there's definitely been a deeper review of critical supply chains of that. There is no doubt. There is a real critical sort of assessment of location strategy and contingency. So we definitely see that happening. So there is a focus on a balance nearshore, offshore. It depends on the sector, of course. We've seen obviously food, pharma, some technology type supply chains actually being stressed because of growth, right? And ability to deliver. Others being stressed through lack of demand, across the global network. What we do see is companies reaching out more deeply to support second and third tier suppliers. And we see huge uptick in sign-ups to supply chain programs, particularly in Asia. And we see companies who are focused on sales finance, in the tech sector, for example, again, looking for volume growth, but also looking for insurance cover as well, which is not always there, right, given the credit insurance markets. So I think a supply chain in flux, and working through, no end state in mind, right? But certainly a lot of activity, no doubt at all.
From Citi perspective, do you also see this the movement there across the globe, or do you see that this disruption may be not a permanent one, and it will move back once the situation improves?
No, I think it's this is just another trend. I think over the years, if you think about automation of manufacturing, and we've seen how supply chains have shifted from some low-cost centers back to actually advanced economies where you've got expertise to be able to manage robotics, and we've seen some of that trend in the past. The trade tensions under the previous U.S. administration obviously clearly brought a lot of this to the fore in many sectors as well. So there was a lot of sort of actions, I think, in terms of looking at the supply chain and how robust it was, and concentration in different countries such as China pre-COVID. So absolutely, this is another huge sort of factor. And when we look at what our clients had to face when this kicked off, they had to look around and check how many component parts they had, and where could they get them from, and then they didn't know, was it a demand problem or a supply problem, and and having access to that data to get there. So again, depends on the company, depending on the level of analysis, the data available to them. They're dispersed sort of geographic if they're a global company in dozens and dozens of countries, to be able to understand what that new operating model will look like. But without a doubt, increasing and deeper demand into the supply chain to support suppliers. We see I think it was Euler Hermes issued a report with 20-25% of SMEs with negative EBITDA across Europe, for example. So you see that depth in terms of purchase order financing, providing those loans deeper into the supply chain, and the governments, to James' point, governments stepping in to support that. So absolutely, it's a continued wave forward. I think how long it sustains will be, drive the pace on it. We've seen some industries adapt pretty quickly to it, but I think it's going to take multiple years for any major changes in some of those big supply chains.
Yeah, from Deutsche perspective, Daniel, when you see today the lending perspective, from the lending perspective, how you see the different lending options are available to particularly those SMEs and other mid caps.
Yeah, so I'll touch on a very specific topic. So I think we've already heard that everybody has sufficient products, capabilities, being it on the AR side, invoicing, financing. On the supplier side, everybody has a program, everybody has a support. On the pure lending, the government step in, everybody has a program, they slightly differ. What I see COVID will change, and we already see that, and I'll just found there was an interesting article this morning that Munich Re, Porsche, and a consulting firm has just launched the first flexible factory, and the model is literally factory as a service. So I see completely different asset as a service model, completely different financing models. So because the demand driven, it's more demand driven than supply driven. We need to be ready tomorrow not to onboard clients. We need to onboard and KYC devices. We need to finance devices and not anymore balance sheet. The question is always on whose balance sheet does it sit? And that will be, I guess, in the aftermath of the COVID and for the next decade, the biggest theme and the biggest stretch. How do I see that developing? And that is a relative game, and that might be a bit unpopular. So those governments and countries which have the highest financial strengths, the highest innovation strengths of an industry will be relative winners to others, because don't forget, what governments are spending needs to be repaid by taxes by our grandchildren. So what we have done here is more spending and more injection than after the recovery of World War II. So there is more money being floated to the industry that needs to be repaid at a point in time. And that will be the biggest challenge. And combined, and there's for me what we've not touched, a second trend, and which becomes more and more prominent, and that is ESG. Just to remind everybody, E doesn't equal S and doesn't equal G. It's completely different themes. And if you see that Germany is already, with exports of 126 billion, one of the largest healthcare provider to the globe. I'll see those trends continuing. There will be different industry and shifts. Governments and countries just need to be able to literally support those clusters and have the financial and physical strength to repay it at a point in time. And we as banks need to come to completely different credit and support models for services.
The government can't continue to sponsor companies indefinitely. You know, I think obviously this is not just a commercial conversation we're having or a business conversation. This is a societal conversation. So we do need to support the society. The government needs to support the society, and the banks need to support the societies that they operate in. Unfortunately, the banks can do that post GFC and the capital rules which change. The banks are in a much better position to do it. It can't happen forever. And I think everybody must be aware that over time, you know, you need to release those funding sources as well and provide them on a commercial basis, because I think there are risks of having companies who are actually receiving too much credit for too long. And in fact, it's not actually adding value over the long term. And I don't think that's good for the longer term nature to repay these things. And I think Daniel mentioned the point there, you know, we all have to pay it back in the future, ourselves, our children, etc. So, you know, there is a fine line between saying, okay, that's enough, we've got through the worst of the crisis. When do we start to pull back some of those funds? Having said that, I think the banks also are strong enough to be able to show that commitment through the cycles. You know, this is not the first crisis. It won't be the last crisis. The banks are in a better position to support the clients and the customers. And I think the banks need to do that on a measured basis. I think as we fast forward this clock and hopefully the vaccines come to fruition in the next 6 months, 9 months, who knows, that will be a long-term program. you know, the banks have to reevaluate that. But I don't think it's a case of saying we just need to support everybody everywhere, but know our clients, know where it's needed, get close to them and understand what their current positions are, what we can do to help them actually improve their standings and businesses, and then get involved in them and their supply chain on a day-to-day basis. And I think, interestingly, in the whole world of trade and transaction banking, providing these services helps us get closer to the clients and get a much better visibility on that, rather than saying, here's 5 years money, let us know how you can repay it in 5 years time. So I think the relationship that we have with them is important. I think this liquidity can't go on forever, and it should be done in a measured basis, but we should be looking to support our clients through this crisis and the next. There will be another one, but I think we need to make plans now to make sure that what we are doing today is not setting us up for an issue tomorrow. So really look at that long-term sustainability that we've got, not just in the banking community, but with our clients, but also in the wider economy.
We move to the other very hot topic of digitalization of trade. I mean, every bank talks about it, and clearly the pandemic situation has put a greater focus for the banks to invest in that. From Crédit Agricole perspective, we are driving many initiatives on the platforms, on the AI side, machine learning, RPA, all those technological solutions available. We are in the middle of taking it forward. James, from your point of view, would you see that this technology would help the businesses reduce their dependency on the various geographical challenges in the future?
Absolutely. I think the business case behind digitization more broadly in trade is unquestioned. If you can bring down processing times, document delivery times, etc., then obviously you can significantly reduce working capital financing gaps and therefore reduce the level of financing that companies need and the cost of that financing. So the business case is absolutely out there. And of course, the other thing that technology and digitization allows you to do is to drive funding deeper into supply chains, point that was made previously, and to close some of that trade financing gap, which everybody talks about globally. So I think, this is nothing new. The process of digitization has been accelerating in trade for the last 3 to 4 years. COVID is turbocharging that at the moment. From a Barclays perspective, the first priority we have is to update our core legacy system and replace those so that we become more connectable with the outside world, so that we have the API connectivity, for example, that we need to be able to not just correspond with our clients more digitally, but equally to correspond with the broader market more digitally. And that's when blockchain solutions, third-party supply chain finance platforms, and so on become that much more realistic and effective.
Mencía, from Santander point of view, you are in the lead of a couple of initiatives. How you see this development and impacting on the future trade industry?
And I completely agree what James is saying. I think that this is totally going to be a game changer in covering the gap, game changer in being more broad on our how we do the trade finance. But I think what is also interesting is that this is like long-term initiative, so we are not going to see it in a very short term, the impact. And during this pandemic, what we have seen is that there is a small processes in our day-to-day that can also be improved. And we don't need to go to super disruptive digital improvement, which again is needed, but we have some quick wins on the table that we can do it in a very short time, and we will start seeing efficiencies from a very short term. And maybe to give an example, is something which may sound even a little bit silly, but digital signature. So up to now, we didn't have the digital signature. We needed to have a pandemic to understand that this is something which needed to be changed to become more efficient, or even, I don't know, placing guarantees we need to send physically the guarantees to the public bodies. Now, being able to upload them in a platform is really saving a lot of cost and efficiency. So I think that for us at least has opened the eyes to see the strategy into ways, no? Long-term strategy of digitalization, but also a short-term strategy of what we can do very quickly.
Yeah, Martina, from your perspective, trade industry, as you know, it has been a paper industry for a long time, from ages, from centuries. Obviously, there is when we talk about the change, change in the technology and the way we process trade. Obviously, there are many changes has to be done behind. How do you see that? Would trade industry be prepared from the legal perspective, from the geographical perspective? Particularly, I'm referring to the emerging countries where they may not be at that level of development and understanding which the Europe and other developed countries are. How do you see that gap can be bridged?
Yeah, thanks for the question. So I see it similarly to Mencía from Santander. We are now speaking about the long-term trend that the banks need to drive. Yeah, for instance, RBI is on Marco Polo. We are also looking into open APIs. We're looking into robotics topics, which is more internal. Yeah, but that's the topics we are looking with a long-term vision at. Yeah, and what COVID actually has shown us is that the clients, at least as I perceive it, are not yet ready for that. Yeah, they during COVID needed very practical solutions, and this practical solution was not even an electronic bill of lading. It was just us, for instance, accepting their scanned paper documents for checking. Yeah, this was a very practical solution, and also on the guarantee side, yeah, offering them the possibility to sign electronic the requests electronically, or even us RBI offering them the electronic signature, which was a qualified electronic signature that they can get via RBI. So these actually very practical things were on the top of the agenda of our clients, and I tend to believe that that the banks need, if we really want to drive this change towards a data-driven trade finance, we need first of all to educate our clients, and we need definitely work on the legal environment. Yeah. And for instance, here this rule book for of the payment commitment from Marco Polo was one step into the right direction, where the banks have agreed upon a rule book that now allows the corporates to transact on Marco Polo. So this actually was the prerequisite. Yeah. So we need to work on information for our clients, and definitely on the legal parameters. But I think it's still a very long way to go, and at the same time, we must ensure that the practical solutions are there.
From Commerzbank perspective, do you agree with that? It's a long-term process, and it will take a bit of a time before we can develop a end-to-end seamless technological-based solution.
Yes and no. On the yes side, yes, I fully agree that it's necessary to have that, say, North Star view on where do we as an industry, and that includes the corporate, right, not only the banks, where do we want to be or see us in 10 years' time. Then again, I think we need to realize that corporates have digitized their internal processes far wider than might be known widespread. So when we offer solutions that may fall behind what corporates are ready to do from their internal processes. So we need to make sure that we have solutions that are actually solving problems for the corporates and not adding another burden of, say, digital administration. And therefore, I think it's very important that while we focus on the 10-year vision, and for example, the blockchain platforms, and I mean, like all the others before, right? Clearly, every bank, including ourselves, is active in some blockchain solutions. Now, if you take a critical look, I mean, none of them, after 3 years of intense development, none of them is even close of having adoption rate that is significant in the market. Yeah? We're still talking of, say, yeah, right and left. The platform is about to go live or has gone live in the last quarter and has the first or the second, or say it's all below 10, yeah, transactions on the platform. This is nice R&D, and it's still important to do so. It's absolutely important to do so, but it's not yet solving problems of our corporates. And therefore, we need to focus on trying to connect step by step, process by process, or sub-process by sub-process, connect the dots and try to create value on the short term to drive the digitization. And yes, we must use the momentum that COVID has now brought to the industry to engage all participants in a transaction in order to do the next step.
Daniel, actually, you know, Enno has really raised a very important point here, that the corporate, the inside of the corporate, they also need to be digitalized. They also need to be familiar with the technology and be committed to invest into that. What is your view, Daniel, from your perspective? Do you see that the clients would also be supporting banks' initiatives, or only demand is coming from the client, and then, you know, the banks are supposed to or are required to do more to bring a tailor-made type of a technological based solution?
I think that's a very difficult one. So I'm not really convinced that we will see why having bank proprietary portals that will solve any of our clients' problems. It makes our life easier and more convenient, but not our clients' life. So there is no, in the banking industry, agreed API protocol how clients can basically send data to us. So that's why neither clients will invest, will spend millions of technology money to make it look slicker and smarter, but we have not really addressed the problem. I strongly see here neither banks nor corporates in the lead. There will be fintechs who will basically provide a solution in connectivity for certain data formats between the banking industry and a certain industry. I'll see here also more sector solutions than one size fits all. Chemical industry is very different to automotive, very different to defense, so on and so forth. So we will here see sectorial solutions where we then need to be able to adapt them. Second thing I'll see on the digital front, there will be over the next, and I'm not sure when the right time is or what the inflection point is, a consolidation driven in the fintech space. Unfortunately, that's my prediction. We banks, as we are not very smart and cool in collaborating, all of us have bits here, there, and the next one wants to be cooler and has a bit there. There will be, and we've already seen that by PE firms, they will drive the consolidation. If you see what SoftBank is doing, if you see what Blackstone or BlackRock is doing in investing very targeted into working capital solutions, we will basically watching what is going on, and we might or might not play a role in that space. So I think for us as an industry, we need to reassess our model in working with fintechs. It's not anymore fintechs versus banks, because we provide balance sheet and liquidity. Clients have seen in a crisis that is an added value or something to have. However, we as the banking industry have not agreed on what are platforms. I think if you look at what we have on the payment side with SWIFT, we need something similar on the trade finance side for the banks. Then it's us to play a role. If we can't come to an agreement and solution, I will see others stepping in, and we will be recipients on either side.
Yeah, from a Citi perspective, the Daniel, what Daniel raised is also a question that the fintech is a part of the solution, is part of the equation between clients, banks, and fintech. What is your take on that?
Yeah, I think absolutely. I think we've probably all evolved to that, stage where it used to be bank, goes and builds on its own in a very siloed way to try and get a sort of a competitive advantage. And those projects were massive investments and took 10 years. But I think in terms of time to market and ability to invest in a single project in terms of resources, it's just not possible. So that collaboration with various different partnerships and alliances with across the industry with other banks or with fintechs is critical for us to be able to use our resources in a wise way, to be able to invest and fail often, okay, but to be able to invest in many other projects as well. But I think, look, the theme in terms of digitization, we've all seen the demand for digital solutions increase, obviously, through COVID. And I think the theme, certainly, we had a series with CFOs recently, and how it's moved from a theme of productivity. Internally, it was productivity mainly for many of us, I think, within banks, but also for our clients, to very much about organizational resilience as well. And security also, as they develop their new business models, it's critical for it to be a digital model and to get the data analytics from that. So that's important. But also, and I think James mentioned it earlier, in terms of that brings a transparency to the entire supply chain, and that transparency is critical for us as risk takers to be able to to observe, to understand these flows better and bring better risk appetite and more risk appetite to bear, which is critical to the world in terms of driving the economic progress, and that whatever it is, 1.4, 1.5 trillion plus in terms of unmet trade finance need. And certainly when we connect our institutional investors to our corporate clients, that transparency and understanding of trade flows that digitization and data can give us is going to be critical to help bring that transparency for the future.
Thank you. Yeah, it's quite important that all these stakeholders in the technology solution take part in with the aim to develop the trade industry altogether, and rather than competing one against other, and then going forward and put a solution which may be a very short-term solution and not for the long-term benefit for the client and for the industry. It's also true that where I see that a lot of development coming from the robotic side, the machine learning, or the OCR technology, where there is a quite a significant improvement made on the cost of improving the efficiency of our processing. And I think the future will definitely hold in how this technological based solution can be developed to help our clients, to help the banking industry, to lower down the costs, which is today a key topic for all the banks, to see how the investments in those technology initiatives can bring a good return to all of us. No, thanks for that. And maybe the last topic, which on the sustainability and on the ESG side. Andrew, what you see, are the bank doing enough on the sustainability?
I think it's a nice bridge from the debate about digital, actually. Just to link that through the future, whilst we all move our sort of online propositions forward, the real opportunity is to really smash through those silos. So I think the banks that engage on the broadest possible ecosystem make some real material differences to the client's own digital journey, like we've all said, and then actually deploy that new technology internally, right? So it's, we're using robotics and we're using AI, and no longer is STP straight to printer, right? That we've laughed about for years, and we've got to get rid of that and move on and drive this industry forward. So it takes us into that whole topic about the future of trade. We definitely see sustainability as a leading priority for clients. You know, the recent Navigator review showed that 85% of corporates felt this was a priority for them. So no longer a, if you like, a nice to have at the center of top of house thinking. And we see, you know, certain sectors really take hold of this topic. So with my commodities hat on, for example, you know, we look at, you know, power utilities, renewables, almost merging into that oil and gas sector, creating a new sort of super sector. And we look at major strategic topics around transition management and transition risk. So this is real, I think. This is here and now. So for us, the future of trade finance is absolutely wrapped up in the digital journey and also our support and response to the world of greater sustainable finance. And as a firm, we want to be at the very forefront of that. So this is big for us as an industry, no doubt.
Michael, from your perspective, do you see that the sustainability agenda is more pushed from the European side of it, or it's more on the Asian side also, and your clients are looking for to put a lot of investment, a lot of focus on the sustainability?
Yeah, it's a good question. And I think, you know, the client base that we deal with globally and here in Emea as well is obviously there's a big Japanese client base on the inbound side, but we also deal with the region's biggest customers as well. I think it's global. You know, I think that global agenda is picked up. And if sustainability isn't at the top of anybody's agenda at the moment, then it soon will be. Again, I think the crisis has forced people to sit down and look at what's really important, and not just the generational thing that we talked about before, but sustainability is definitely there. We talked about the supply chain. You know, I think that's understanding, you know, the origins and the sustainability of supply chains and the provenance of goods is one thing, but maybe just to switch tack a little bit. I mean, as a MUFG, we're really strong on the project finance side. So when you actually look at the carbon and carbon offsetting, and then you actually look at the renewables, the pickup in renewables against that, I think in Europe's really proven to be a bit of a leader there as well. I mean, especially if you look at the 3 economic blocks, Europe's Green Deal is a real key part of that. So, you know, it's really going to create that push for companies that are already investing in renewable energy and renewable financing that goes with that. It creates that space, it opens that door, and then it's up to the banks then to really step into that and provide support and facilities for it. So, you know, if I take a project finance deals that we're doing at the moment, not only are they in that space, so the world's biggest, you know, offshore wind farms, but we're supporting it not from a credit point of view, from the trade finance point of view that goes with that, from the project accounts that go with that as well, and creating green accounts as well for investors that we can look at. So you can see there's this momentum building, and as the EU has opened this door on the Green Deal space, you know, banks have stepped into it, and it's going to be massive. I mean, if you think this is transformational from a societal and also from a business point of view. So, you know, definitely there, not just in the short term supply chain commodity space, but also when you start looking at the medium and the longer term stuff as well. So yeah, it's great. It's great for banks to be involved in this, because I think, you know, the reputation that they carried out of the last financial crisis, you know, takes a bit of undoing. So I think these are all good steps in that same direction, but nice to be involved in it.
Mencía, from your perspective, Santander, what is your take on that? Is it a sustainability? Is it a sort of a product which brings you a feel-good type of a factor? Is it also more important for the society, or is it more also banks or the financial institutions and the market is seeing is as another product to create or to generate a business around it?
Yeah. So maybe first of all, I think one thing that has been accelerating this awareness of sustainability, I think it was there. I think pandemic has shown when all the economy has stopped, planes grounded, not very much vehicles in the streets, factories closed, and we have seen the real impact of the economic activity in the carbon emissions. So I think. And I'm saying all this because now it comes a real fact that working on sustainability and working on being more sustainable has an impact on our long-term sustainability in the future. No? So I think that awareness has been super important, because now with any client that we are speaking with right now, independently of the geography, independently of the sector, is putting on the table the discussion of what products from a bank perspective do you have which can help us in our strategic commitments in the long term. So good thing is awareness again. Second thing is that corporates are counting on bank partnerships to be able to implement it. So they are counting on not only to just go put that product in the table and just do it. So thinking more strategically on how to do it. And I think from a bank perspective, at least what I see in Santander is that there is a real commitment, not only lucrative, which is not, is also because we want to go we want to accompany our clients, and we believe in that this is the way moving forward. So yes, I would say that now the reality is that pandemic has also helped us open eyes and see that we really can do things to change how we have been working in the past, and that will have a real impact in the future.
Lastly, we can take around the table, asking you to give the most optimistic and pessimistic scenarios. Maybe around the 4 categories, you have the optimism, rather optimism, or relatively optimism, then rather pessimistic and pessimistic. Daniel, start with you.
Okay, here's my prediction of the world in a 1-minute speech. I see vaccine coming very soon. I hope, also, let's be optimistic. I see a large part of the population of the developed world being vaccinated by mid of year. Some might be earlier by Easter. That will help us to focus on the drivers. Drivers will be then for us to focus on emerging markets. Our governments then to realize the only way out is then to support emerging markets trade, because again, sorry, taking Germany, we are depending on export, not on our little beautiful country. We need that to happen, and that will help the Chinese do the same, as they just signed the trade agreement. So I hope that we will see in the aftermath programs focusing on reboosting the economy. And personally, I hope that is all done with a clear focus on ESG, because that is also something we as an industry and the society need to collectively focus on.
Thank you very much, Daniel. Mencía, from your perspective, what are these scenarios? Pessimistic or optimistic?
Pessimistic. Okay, optimistic. I think same as Daniel, we expect a recovery to see some recovery next year already, probably from Easter onwards. I think we agree on that. With some diversification, less concentration on certain countries, which also gives some room to emerging markets to switch some part of the production to other emerging markets, creating globally a positive impact. I see an acceleration on sustainability as well in ESG, also acceleration on digitalisation. We spoke about it. And another topic that we spoke about it, and I think it was going to be important as part of the recovery, is funds moving towards different risk models. I think it's something which is important, new dynamics, we need to also start thinking in new risk models, and I think it's also an awareness now in every bank. So that's probably on the most optimistic, on the pessimistic, rather optimistic cases. Pessimistic case, I think we also spoke lengthily here about the aids that we have been seeing from governments injected in the economy. With all these aids decreasing or even being completely written off, we are going to start seeing more defaults across our SMEs or corporates in general. So I think that the big part of these defaults are still to come, and we are going to see it during the next year.
Thank you. Enno, from your perspective, how you see the future for us?
Well, I tend to be an optimistic. It's easier life being optimist, honestly. Adding to what has been said, not repeating, I'm optimistic about the state aids to stop, because we need them to stop. And as we all know, it's more difficult to stop those programs than to initiate them, we should be optimistic that we as a global society manage to stop these programs in a coordinated manner, not to run into a, say, arbitrage of government support to optimize for locals, but rather optimize for the global scheme.
Thank you. Peadar, from Citi side, how you see the world and the trade industry?
I think we're clearly still in for a bumpy ride over the next couple of years. The recovery will continue to be slow and patchy. I think the aid that is out there has clearly, you know, I suppose, subsidize a lot of different models, and we know there are a lot of zombie entities out there that as say that aid sort of tends to move away. We will see some of those defaults, which is definitely a concern. I'm an optimist, I have to say, as well. I have to say, when I look at the COVID crisis and the pandemic, when you think about the energy and the momentum in terms of positive change that is happening out there, we just talked about digitization. We know ESG has been out there, but the transformational in terms of people's business models. Let's hope that that vaccine does come early, and that you know, from a health perspective, we're back to normal as soon as possible. But let's hope that the energy and momentum that's causing real transformational change across you know, global kind of supply chains and ESG and digitization continues, and that we don't forget about that as soon as this vaccine comes in, hopefully in Q2 per Daniel. Thanks.
Thank you, Andrew. How do you see that?
Yeah, I mean, tough times ahead, right? I think it's certainly far from easy over the next sort of, you know, this year into next year and beyond, most likely. I think in simple terms, you know, global trade is at the center of this recovery. So, you know, that's important for us to keep the wheels of trade moving. We're very, very clear that we can build back better through the adoption of digital. And really, it's down to us as an industry to lobby for those right conditions that support sustainable, resilient, and inclusive global trade. So I think tough times ahead, but we can help our clients through that. And as an industry, we can come back better and stronger for it. So looking forward to the challenges, but never easy, of course, right, in these very difficult times.
Absolutely. Martina, what is your perspective?
Well, in addition to...
Given your president, you know, all the, so far, what I have feel, energy in myself, they're saying that a lot of global heads are really pushing towards more of an optimist view.
Well, actually, as we are leaders, I think we must be optimistic. This is our nature. And in addition to what has been said already, I think where we can be optimistic is that with Joe Biden being elected president, we in RBI think that the trade policy is expected to be less erratic and more predictable, and that the trade tensions of the US with international partners are likely to ease. So that's something that makes me personally optimistic, because I think that this is a good sign. What definitely will be a challenge is that now in Austria we're heading to the second lockdown starting from tomorrow. And I think in the first lockdown, we as leaders were able to motivate our people and to keep them engaged there, because everything was new and we were thinking how to help our clients. And I think with the second and even potentially third lockdown, this may be different. So I think what will be a challenge to keep our people engaged and still to be productive. That's one point. And then definitely, this has been already said, it's the topic of the overall economy. How long can government still sustain their helps? So this is something that I think will be a challenge. Yeah.
Thank you, Martina. James, how do you see that? A lot of Brexit and you know, the European Union. Then obviously Martina mentioned about Biden came into the power. So how you see that?
Well, I've been trying not to mention Brexit throughout, but there we go. I am quietly optimistic. I'm hoping that the vaccine will be a success. Whatever you think about Brexit, at least that will start to unravel and start to happen. So we'll get more of a direction of travel. The US elections have obviously resolved themselves, or hopefully resolved themselves. So we're starting to get more of a direction of travel, and hopefully in the right direction rather than the wrong direction. My hope is that governments, countries, all of us people can work more collaboratively on a global basis and cross-border, because I think that is more essential than ever. And my hope also is that as a community, we can all learn the lessons from COVID about how we can work better, about how we can act more responsibly, about how we can do the right thing, because only that way will we actually create a more sustainable world for us all going forward.
Very well concluded. Yeah, I fully agree with that. Michael, from your perspective?
But the disadvantage of speaking towards the end is that everybody said all the good stuff. I'm trying to be original. Now, well, on the realistic side, rather than pessimistic, I think we're living with COVID for the next 12 months minimum. You know, by the effects and then the after effects. And I think, you know, we're coming through the second stage of the intensive care part, and I think we need to move then into the rehab and the longer term recovery, basically. So, you know, changes will be necessary, definitely. There'll be some casualties along the way, as people have mentioned as well. And I think we need those, unfortunately, because, you know, otherwise somebody's got to be paying these bills over the next generation. So hopefully trade finance can come out showing that it can actually help perform better as a product set over that period. I think the sustainability agenda will definitely pick up. I think this period has caused people to reflect about the important things in life and where people are doing things for the good and where things might be more sustainable. Society needs it, customers are moving towards it, and we as banks need to help them in that space on the short, medium and long-term parts of our businesses. And I think fundamentally, leaving on a positive, it's a good opportunity for the banks to show that they can contribute positively to it. I think there's an opportunity here for us to repair some of the damage that we caused in the previous decades. So I'm an optimist at the end of that, and I think there's a central role for banks and trade within the banking community to play a role.
Thank you very much. I mean, it is really comforting to hear all the views from you leaders in this industry, that, you know, we all believe that we maybe it's not a choice to be a pessimist. We have to be optimistic in this situation. You know, we are working for the institutions who are financing the real economy. There are a lot at stake, and I think the approach which we all are taking together and in a cooperative way, I think would help our business, our people, our clients much more than you know, to be able to come up to meet those challenges. I believe also that, you know, the trade industry, the way it is transforming towards technology, maybe on the capital allocation, also there are certain investments going into certain sectors. You know, health sector is booming, maybe TMTs, telecom is also getting streamed there. We all have to readjust our models to be able to continue to positively contribute in the business. And I fully agree with you, Michael, that this is maybe the first time that the banks are part of solution, not part of the problems. Today, when we see from the last pandemic, the banks acted pretty quickly to the call of regulators, and a coordinated approach has been adopted. And I believe that it will continue, but I also agree that you know, the second pandemic maybe is a bit more tiring for the people, for our teams. I feel that our global teams also needs a bit more closer contact, interaction, you know, from the head offices and from the management, so that they feel that there is a optimism in the whole market and in the sentiment. So they continue to develop their businesses in the local geographies. Well, guys, I really thank you very much for this interactive session with you, and thanks to GTR also for organizing that. I hope that we will be able to interact more in future, and maybe not you know, take a more frank discussion like we did today. Thanks again for all, and stay safe, and let's let's continue to be optimistic. Thank you very much.